Today, International Banker is joined by Mark Batten, PwC's UK Banking and Capital Markets leader, to discuss UK leadership in financial services, regulatory impact and geopolitical risk. Mark, very good to have you with us. Now, PwC recently teamed up with the City UK to produce the report No Time to Lose, Reasserting UK Leadership in Financial and Related Professional Services. Now, this report states that using PwC's economic modelling, the financial and related professional services industry could generate up to £53 billion in additional economic output by 2035. So let's start with this. Can you set out why the City UK and PwC chose to do this work now, what you heard from senior stakeholders, and the potential for the UK economy?
Of course, and great to be with you here today. Look, it's been a fantastic opportunity for me and my colleagues to be involved in this piece of work with the City UK. It is probably the biggest listening exercise in financial services that has been done in many years here in the UK. We spoke to some 70 CEOs and chairs, some 300 meetings across the industry covering both established financial services organisations, but also fintech, academics, regulators, and the work was really underpinned by detailed economic modelling, which is where that really significant punchline comes from. And why did we choose to do this work now with City UK? Of course, financial services is a phenomenal asset to the UK, and I think we're all aware of that, contributing some 11% of GVA to the UK economy, employing over 2.5 million people. Really important to note that 2/3 of those people are actually outside the City of London, so it has a nationwide impact. And of course, London is unique, the UK is unique. Our financial services business is so global, and our global positioning remains incredibly strong. Largest net exporter of financial services in the world, #1 in fixed income, currency and commodity trading, #1 in specialty insurance. So we have this phenomenal national asset and this phenomenal platform. But when you look around the world, others are catching up. Geopolitics is shifting, capital flows are shifting, trends in regulation are shifting. And if you look at the indices of the attractiveness and vibrancy of financial services centres around the world, you can see that gap is closing. So we thought absolutely essential, and it tied into the narrative around growth for the UK economy, the perfect time to be thinking about what conditions would need to exist for the financial services industry to scale even beyond the contribution that it's making at the moment. And as you say, the report highlights this opportunity to generate over 50 billion of additional GVA for the UK economy by 2035. That's the equivalent of at least 2 major cities or the entire economic output of Canary Wharf. So this huge upside if we get the conditions right to enable that growth. And we picked out those 5 key themes: huge piece on technology, of course, the tax and regulatory environment, the opportunity for financial services to power the investment needed in infrastructure, the importance of our global relationships, trading relationships, and finally, nation of investors. How can we help citizens in the UK achieve the benefits that are available from participating in the financial services ecosystem?
Among the 5 imperatives for the UK's future competitiveness set out in the report is lead at the frontier of financial technology, in which it is stated that the UK must lead the world in tokenised assets, prioritising financial and real-world assets where the UK has a right to lead, and catch up on crypto and stablecoin. Why specifically do you see tokenised assets as being so crucial for future growth prospects? And does this have implications at all for the development of a central bank digital currency?
Technology was such an important component of the report, and that covers a number of different dimensions. Modernisation of legacy architectures, capitalising on artificial intelligence, readying for quantum, and of course this topic around tokenised assets. And this is as much about tokenising wholesale capital markets, getting the cash side of those transactions right, and digitising financial services processes, as it is about crypto, which perhaps sometimes gets the balance of the media commentary. And of any of the themes in the report, this is one for me that really seems to have captured the attention of industry stakeholders. And the number of conversations that we're certainly having in the financial services industry is really accelerating. Why is tokenization important? Because this revolution, powered by blockchain and distributed ledger technology, offers such incredible opportunities in terms of cost, speed, productivity, and also potential benefits for democratising access to investment products for citizens. Why do we need to move at pace? Many major financial centres around the world are really pushing on the boundaries of putting this technology to work. And I also think they've done a good job of signalling that they're open for business when it comes to tokenization, digital assets, digital money and crypto. The UK has all the underpinnings to be hugely successful in this space. Our talent pool, our legal frameworks, our stability, and there's a huge opportunity for us to continue to lead on this topic, providing this underpinning for further economic growth. And I think a big component of this is getting the message out there. A huge amount of work has been done here in the UK around sandbox activity, around industry pilots, around the regulatory and legal frameworks. And I think it's really important for the UK to communicate that with one joined up narrative to show that we're at the forefront of the digital assets and tokenization revolution. You asked about central bank digital currencies, and it's great to see that the national payments vision has it on the roster to be looking at this over the coming months, the options that are available for a digital pound. So I think we can see there will be focus on central bank digital currency, but for me that will also evolve alongside innovation and initiatives around tokenized deposits, and also creating the right environment for stable coins to play their role in tokenized money.
Now, you mentioned a couple of times the nation of investors kind of theme that came out as well. The report also sees the UK's long-term growth in part depending on people investing more and building more financial resilience. And just to quote that, higher household investment would deepen domestic markets, strengthen funding for innovation, infrastructure and business growth, and lessen fiscal pressures by reducing reliance on state provision. Now, in your opinion, how can the UK practically work to build a nation of investors, as the report states?
The nation of investors topic and opportunity, I think, is fascinating and exciting. There's a lot of statistics in that report, and one that stands out for me is the concentration of UK household wealth in housing stock and in cash. If we compare to other major nations, we are relatively underinvested in particularly equity products, meaning that our citizen stakeholders miss out on the opportunity for growth because they're over-concentrated in cash assets. And there's a huge opportunity for the UK to put those funds to work. That's about providing for retirement. It's about supporting the nation's investment needs. It also, connects to the opportunity to finance national priorities. And of course, topic that gets a lot of coverage in the media, the vibrance of our public equity markets. So if we can get the conditions right to support the nation in being more proactive in investment, there are great opportunities around. What would enable that? I think number one is education. And that's education over individuals' lifetimes. There's a role there for the industry as well as for governments and regulators to really execute on that. Access to advice, so leveraging technology and the right regulatory framework to make the right proportionate advice available to individuals when they're making financial decisions. Simplicity and stability, particularly around tax and regulation, so that it makes it easier for citizens to understand the tax environment in which they're operating, so they can again put capital to work with confidence. And finally, I'd say simplification of communication. It can be challenging to work through the processes and the paperwork associated with making financial decisions and investments. So anything the industry can do in conjunction with government and regulators to simplify those communications, I think will also help unlock this idea of nation of investors.
Now, you mentioned regulation. What do you see as being the most significant regulatory development impacting the UK banking sector in 2026? And which regulatory change would you like to see implemented in order to improve the performance of this sector over the coming years, and why?
And of course, the political environment here in the UK is fluid, and we will have to, maintain a watching brief on that agenda and the potential to impact the regulatory agenda that banks face. But I think there are a number of themes that we will be able to see very prominently from a regulatory perspective here in 2026. I've already mentioned, of course, the imperative for growth in the UK economy, and the government, I think, will continue to focus on that growth and competitiveness agenda, very much aligned with some of the themes in the No Time to Lose report. And progressing the financial services bill will advance a number of those reforms that are relevant to the banking sector and again will assist in the sector contributing to growth. Those include changes to the ring fencing regime, which have already been signalled, simplification of the senior managers and certification regime, and the Financial Policy Committee's work on the UK capital framework, again an initiative which the sector is watching very closely. And of course, we live in a world of significant geopolitical and other disruptions. So I think resilience will remain front and centre. Basel 3.1 comes in at the beginning of next year, so banks have the rest of the year to prepare for that. And I think there'll be a really significant focus on operational and cyber resilience. And I think the PRA will be consulting on cyber resilience standards in 2026. So I think that will be a huge focus globally and here in the UK from a financial services perspective. What's important to me personally in terms of that regulatory agenda, I would take it back to that piece around tokenization and perhaps leveraging the benefits from AI. I think we need to have the right regulatory clarity and frameworks to ensure that financial services organisations, banks can continue to progress on topics like tokenization, on topics like stablecoin, and getting the appropriate but safe benefits from the artificial intelligence revolution that we see everywhere around us.
We can't keep it out of the conversation. Obviously, AI is everywhere. Compared with other similarly advanced countries around the world, how willing would you say the UK's financial services sector has been thus far to integrate AI, both operationally within organisations and in client-facing applications? What single challenge would you say is currently holding the sector back from achieving even higher levels of AI adoption? And how can this challenge be addressed going forward, as it obviously needs to be?
And look, of course, artificial intelligence, it has such a huge focus at the moment. I don't think a single client conversation or conversation with regulator would take place at the moment without some mention of AI. I'd summarise the challenge for organisations as how do we move from multiple proof of concepts, small scale, to achieving enterprise value across the enterprise so we can realise the benefits of artificial intelligence at scale. PwC, we just released a very large AI performance study. There's both a global cut of that and then a UK cut. That work does show that on some dimensions across all industries, there are gaps to global leaders here in the UK on the clarity of an enterprise-wide roadmap, on embedding C-suite accountability around metrics and so forth. So there are some areas for the UK to accelerate. But that research also shows that financial services is right near the top of the pack of different industry sectors for AI fitness. So I think there's more to be done, but the opportunity and the progress is being demonstrated. When we talk about the different use cases or different opportunity areas, we're just about to launch a piece of thought leadership from PwC here in the UK with our strategy team, which really sets out a future vision for the impact of AI on retail and SME banking. And we're looking further out into the future. And that's when I think you can see the transformative opportunities and benefits from particularly from how we service customers. And you can even imagine a world of agentic powered technology that is reinvesting cash deposits into investment products, almost real time. And you can really see the benefits to both consumers and to organisations that will come from that. Perhaps bring it back to the here and now. There are a number of examples where you're seeing real progress on the industry, demonstrable progress that is releasing enterprise value in banking. One of those is the perennial challenge of managing regulatory obligations, control frameworks, policies, and the power of AI to already demonstrably deliver great efficiency and quality gains to help move the industry forward is really prominent. What do I think is important? A couple of things I'd say on that. I think there are three domains that organisations need to bring together. You need to have industry and domain expertise in the room. You need to have technology and engineering capability in the room, and you need to have that underpinning of trust. So the responsible AI frameworks, the governance frameworks, the model validation. And I think when organisations bring those three skills together, that's when you unlock the opportunity to deliver enterprise value. And then I'd close on a topic that I mentioned on the Nation of Investors, but it's back to skills. Investing in the right skills across the organisation, from the board all the way across the organisation, to enable people to share in the AI dividend, to contribute to their own skills development, which is of course beneficial to the wider economy and society.
Now, given the profound geopolitical changes of recent years, and especially the current ongoing conflict in the Persian Gulf, how urgently are you observing UK banks factoring geopolitical risk into their formal risk management frameworks? And do you or PwC have recommendations for how the UK banking industry can most effectively manage geopolitical risk?
Yeah, and I think back to a panel event I did a year or two ago when we discussed the opportunity for organisations to create a geopolitical senior officer, almost an exco role, to think about geopolitical risk. And I think many organisations are doing this. It's critical, I think, to have explicit consideration of geopolitical risk in the enterprise risk framework, and then embed that into how the organisation manages risk. And that's relevant, I think, to financial risk as economic shocks around the world, supply chain shocks, impact on credit risk, impact on the real economy. So how will different evolving geopolitical scenarios affect your lending book, your markets activity, and also, of course, the impact on non-financial risk. The changing or increasing threat from cyber incidents, the impact on things like data centers that we're seeing around the world. So I think there's a number of these different risks that organizations need to think very carefully about how they embed into their enterprise risk management frameworks. And then it's about testing that through scenario analysis, through recovery planning, and moving from frameworks that are perhaps sometimes just exist in PowerPoint or on paper to something that you've really tested and embedded, so that you can demonstrate resilience to your stakeholders, to regulators, etc. around the world to really build confidence. And I think I close by saying, we see a real opportunity for organisations to seize competitive advantage by building resilience in from the bottom up, rather than having it as a regulatory afterthought.
So making it a real part of the business.
Making it a real part of the way you run your business, you plan and you execute, embedded in strategy all the way through the enterprise.
Terrific. Mark, thank you very much for your time and your insights today.
Thank you.